Welcome back to the StockTA podcast. I'm Kevin Steuer, your host, and I'm joined today with our favorite commodities expert, Shad Marquitz from the KE Report. Shad, how are you?
Well, I've been better, Kevin. I think when we get into some of these charts, you'll see what I mean. But it was nice seeing you at some of the commodities global expos in May, and maybe we should have sold in May and gone away, man, because it's been ugly the last couple of weeks.
Yeah, there was a lot of bullish sentiment at that conference, and you know, we had mentioned to a few people, is this going to be a sell in May and go away? And everybody's like, nope, this rally's got legs, and here we are. And let's dig into some of these charts to really show where we're really hurting.
All right. Well, I'm going to start off by just sharing gold because I think gold's a prime mover in the commodity space. So, one of the things everybody's been watching has been the 200-day moving average on the daily. And so, like, if we look in here, it broke last Friday, and I wrote a little piece on Substack saying, oh, we just broke it. But it's a lot worse in the equities. But you can see we had a little bit of a reprieve yesterday, and then today, as we record this on Tuesday, the 9th of June, even further damage. So, gold currently on the futures at 42.86. That's not what you want to see in a precious metals bull market or even in a commodities bull market because it puts into question, the larger thesis. And what I would also say is when you look at gold, I can switch it to the weekly. And on the weekly, I'm going to make it a 50 week moving average. And that's what's up next to bat on these charts. And gold is right there tagging it. And so that's a little nerve wracking. And when we get to the equities, you'll see some of the equities have already broken the 50 week. So one of the things I always stress to people is to look at charts across different time horizons. And so you look at the hourly, you look at the daily, you look at the weekly, you look at the monthly. But this weekly chart is a prime mover for the commodity sector. And so to see gold down here, tagging it right here, just a little trepidation. Any thoughts you have on the yellow metal?
Yeah, I'm looking at a separate chart here. And spot gold's down 8.84% on the month, and it's given up all its yearly gains. And we're now negative 0.69% on the year for gold, which if you would have asked me that a month or two ago, I don't think I would have said gold would be negative at this point in the year.
Yeah, here's the year. It really started on this candle here in January. It opened up here, and we actually are slightly below where we opened the year. So crazy that we're negative for the year now in the yellow metal. So yeah, and so I'm going to pivot over to the gold equities, if that's okay,
Yep.
and just show that it's even worse than gold. So gold is more resilient. You don't have central banks buying gold equities. So when we look at GDX, that's really the big producers. Not only has it broken down below the 50 and the 144 day and the 200 day, but it's way below it now. And you can see that over time, over last year, it was respecting the 50 day. At each of these little places, it was finding support, bouncing off of this level, bouncing off this level. Really, when it broke down in March was that ugly time. And I think we talked somewhere back in March or April where this whole whipsaw was going on. But the other thing that concerns me, Kevin, is the blue line is the 50, the green is the 200. If the blue crosses through the green, or if the short duration crosses through the long duration, that's what's known as a death cross. And so sometimes that can set up an even longer period of corrective action. And so for the gold equities to be down this far and to see that getting really close to crossing, just not a good combination of events.
No, GDX is down 9.5% on the year. And on our own internal charts and algorithm, we have the trend 88.71 and it's trading at 77.59. So it's really not a great setup is to have the price that far below a bullish trend. So this past couple months, this past week can really do some, I'd say, long-term technical damage to a chart here.
Yeah, and I think people should just own up to the fact this is a bearish chart and this is a bear market at this point. Like if you're down more than 20%, it's a bear market. Gold is down like 26, 27% as we speak. And this chart from the highs, from the 117 high in February to 77, this qualifies as a bear market. Now, I know that's not going to make some people happy that are invested in resource stocks. Look, I'm chock full of them. I've got 60 resource stocks in my portfolio. I don't like reporting on this any more than anybody else, but I'm not here to blow sunshine at people's rear ends either. This is a bearish chart.
Yeah, and if you look at the tops of it too, it's set lower highs everywhere you go. It's lower lows and lower highs, and just from a simple, charting standpoint, that's really not what you want to see.
And if we go from the daily to the weekly, unfortunately, as of the end of last week, That weekly close broke below the 50-week moving average, and then this week we're still below it as we are trading. It's still, the week's not over. Maybe it can get back above it, but if it breaks the 200-day and you shift over to the weekly and it's broken the 50-week already, the next stop is down here at the 144, which would be the GDX going down to right around $60. So not a great look for the gold equities, and it's the same thing with the GDXJ. The same kind of pattern. It's broken all through the moving averages. If we shift to the weekly, same thing. It's broken below the 50-week moving average. So just from that standpoint, kind of ugly. And if you look down at the commodity channel index, or if you look at the true strength index, or if you look at the RSI, they're all diving down to the right. That's just showing you the weak trend that we're seeing. So that's my thoughts on the gold and gold equities.
I mean, gold's, all those really held the 200-week moving average for a while, or the 144-day, whichever one you prefer. And I mean, it held in for a couple of weeks, and once it blew through there, I mean, it was down quick. Like it didn't really. I was surprised. Like I thought we'd be due for a bounce, and the fact that it was so weak and it just cut right through there was kind of surprising to me.
Yeah, I'm going to make this even a little bigger. There's what you're talking about, where you can see it was riding along here, and I thought, okay, if that holds and we bounce and we get out of there, get out of the danger zone, that would have been escape velocity. But to break this hard through it, it's not like we just went a little bit below it. We gapped down, and then we dithered around yesterday on Monday, and now on Tuesday we shot down even further. That is like a clear break below support, and so there's no way to put lollipops and sunshine on that. That's an ugly looking chart.
Yeah, we have trend for that at 116. So we're a ways away from flipping back to a bullish trend on GDXJ.
Yeah, so that's just a place that people may want to start going through their portfolio and looking at, do they want to start accumulating some gold stocks that are getting beat up here? They're clearly not going to be overpriced. If we look at silver, it was actually doing so much better. And at the end of last week, it got down and tagged the 200-day and then closed up a little bit above it. Yesterday, it actually stayed above it at the close, but dipped below it briefly. But today on Tuesday, we've lost it. And so even silver has lost the 200-day. And so unfortunately, that's not a good look for silver either. I don't know if you have any thoughts directly on silver, but
I'm just surprised, just the general weakness in it. I feel like silver was, at least from the retail side of things, I feel like retail was plowing into silver a lot more during that gold rally. So I thought there'd be some retail hands here to kind of step in and buy, but I don't know if they're all in, something else, whether it's Bitcoin or AI stocks. But it just seems like both from an institutional level and a retail level, there's just doesn't seem to be any buyers for silver right now.
Yeah, everybody can't be in the SpaceX IPO. So where did the silver bugs go? Where did the people supporting silver go? And so, yeah, not a great look for it. But when we look at the silver equities, it's similar to the gold equities. Only, I'll tighten these up a little bit. Let me just make these 9 months. I mean, yeah, that way we can just kind of see a little bit bigger chart of what happened here. So with SIL, which is the Global X silver miners, these are the big boy silver producers. It dipped briefly below this 144, but it was consolidating here. It never really got down to the 200. And people that don't put this 144-day in there, they just have the 50 and the 200. It would have been in no man's land for them. But I was watching it because you could see it held here and here, the 144-day, because this is a Fibonacci number. It's one of the numbers, the language of the universe is the Fibonacci sequence. And so it comes into charting quite a bit. People that use Elliott wave and people that do Fibonacci extensions or retracements use Fib numbers. So I use it for a moving average because it holds up so often. And you could see it was really respecting it up until 3 trading sessions ago. Basically through last Thursday, and then when it lost, it lost the 200-day right afterwards, and now it's just SIL has dove down just like the gold stocks.
I follow the 21-day exponential for like short-term swing trading, and that right now is about to curl beneath the 144. And for me, that's usually a big red flag. Like usually that means the worst of the selling's not done yet, in my experience, and that worries me here.
Yeah, and you can see here that the 50-day exponential moving average is getting ready to go down below the 144, and the 200-day. If you extrapolate this out, it's going to be one of those death crosses again. So what you don't want is short duration timeframes going below long duration, because that means you're in a bear market. You want the opposite. You want the golden cross, where the short durations are going up through the longer ones and then staying above it. And you really want a market like we were seeing here, where it was respecting the 50-day and it was bouncing off the 50-day, because that's a strong market. And it was strong up until February. When it broke in March, that was the tone change. That was the trend change. And I thought, okay, we finally got back above it for this April move and even this May spring fling move. And I thought maybe here we keep going up, but no, this is a clear reversal of trends.
I was a little worried, like when we had that gap up in early May, and some people like, oh, all gaps got to be filled on charts, and I was like, I don't know, like this could be that launch pad for silver, and I mean, it gapped up through its 21-day exponential, blasted through its 100-day, blasted through its 50-day, and then on the way down, it blasted back through all those in a day. That big a move in that short a time frame was pretty impressive to me. I mean, you're talking about less than 2 weeks, right?
Yeah, and you can see the gaps on this chart. There's a gap here, and there's a gap here. What you don't want to see is gaps that break down through a moving average like that, because that means you didn't even stop and test support. You just shot right through it. And then you saw that right here where there was a gap below the 144, and that's why it went down through the 200 with such vengeance, is because there was no support here, and the 200-day didn't act as support, which normally it would. A lot of institutional investors and a lot of algos and machine trading is keyed off the 200-day. So when you lose the 200-day, that's why it's such a big deal. But even if we shift this SIL chart over to the weekly, unfortunately, we just lost the 50-week, and that's a big one. Like we hit it last week. I thought, okay, saved by the bell, but now the bell is rung, and it's maybe the Grim Reaper coming for the silver stocks. So I'm all chalked up on silver stocks. I don't like seeing this any more than anybody else does, but I'm even debating whether I should be nibbling here or wait to see if there's more follow through. So I'm kind of in a wait and see kind of mode right now before I start adding any more.
Yeah, silver is tough right now. I mean, if we keep having some more selling like this, I feel like it'll be the Monty Python movie, one of the movies where they're banging on a drum and rolling the cart down the street and it's Bring Out Your Dead. Like, I feel like we get another week of this in silver, it could be Bring Out Your Dead for some of these junior silver miners.
Yeah, Holy Grail. It's a great movie, and yeah, bring out your dead. Hopefully we're not bringing out our dead miners after this, because what's insane is that the silver stocks and the gold stocks just put in their most productive Q1 earnings of all time. Record revenues, record EBITDA, record earnings, record cash flows. And Q2, while not as high, is still going to be a great quarter. It's probably going to be better revenues than they saw in Q4, Q3, or Q2 of last year. And yet people are pricing these things like silver's going to $30 and like gold's going to 2,500 or something. So it's interesting, the dichotomy between the valuation in these mining stocks and really where the metals prices are. And in fact, that makes me think of this chart here on the BPGDM. So if people are not familiar with this is the gold miners bullish percentage index. It's actually calculated based on a point and figure chart. And I don't think it has a dividend adjustment, but because it's just a technical chart. But what it shows you is it's kind of like thinking of how many gold producers are above their 200-day moving average, or how many above their 50-day, how many are in a bullish stature, but it's using a point and figure chart to do it. And the lowest reading we've had in a long time was in March, which was, that was a very ugly period really quick, but we're down at 769 as we record this. And earlier today, this thing was at 0 for a little while. And we noted it on our show. If I back this up to just 5 years here, let's just go back a little bit further. We had a low reading back at the very beginning of March that was like the leap year day, the February 29th, when it was so low. And that's what started this rally in the stocks. But stocks were that oversold. We're almost as oversold as that again right now, which means we're almost as oversold before the big last 2-year rally even started. And we should also note that this thing was at 100 in January. And I kept telling people, hey, this thing rarely gets in the 90s. You saw it get in the 90s in 2024. You saw it get in the 90s in last year, kind of in the summer. But when it was at 100 in January and even part of February, I was like, holy cow, this thing is cooked. And that should have been a signal that maybe you lighten up. This is a signal that maybe you accumulate. So that gives me a little hope that possibly we're in a situation where these miners are getting too washed out, and it may be a good place to nibble. So just a thought. What would your thoughts be on nibbling here in some of these stocks? Too dicey, trying to catch the falling knife?
I think it's too dicey between what's been going on with Iran the last couple of days, but I also worry about the Fed meeting next week. I feel like, was that Wednesday next week coming up? I feel like that could be, just when you think the low is in, he says the new guy coming in says something that either gets misinterpreted or gets interpreted exactly how he wants it to be, and the market doesn't like it. We're talking about before we recorded, like there's not a lot of good setups right now, just in general across the market, whether it's crypto looks terrible, some of the AI stuff has lost its shine, the software stocks have lost their shine, even some of the space stuff is kind of, just weakened out. So it's interesting. And I have a question for you. So Trump said, I saw something today. It's 37 times Trump has come out since the war started with Iran and said they're close to a peace deal. Say by some miracle, we have a peace deal tomorrow. Do you think gold and silver will go up or go down?
Well, it's really counterintuitive. I mean, I would have thought that, if we look back at gold again, no, that's not gold. I guess it is gold. It's just really far out. I would have thought that when we saw, and let me shift this back to a weekly just for sanity's sake here. So I would have thought when we got the war breaking out, like right around here, that we would have seen a continuation higher, that there'd be a geopolitical bid that would come in. And instead, the war in Iran and the Strait of Hormuz being closed has been a pressure cooker on the gold. So maybe with that logic, maybe the end of a war would be a bounce, and maybe we bounce off this 50 week and it saves the day. I would have thought there would be more of a safe haven bid coming in gold. But keep in mind, countries like Turkey and the UAE had to sell gold to pay for the fact that they can't get oil out of the strait. And so there are some central banks that have been selling. I do think that gets thrown around too often in the market, though, because the reality is China has bought more gold in the last 3 months than they bought all of last year, or almost the same amount. They bought 27 metric tons last year. They bought 24 in the last 3 months. So just in February, April, and May, they bought almost as much gold as all of 2025. So I don't know what China's getting ready for, but that more than scooped up anything that Turkey sold or that the UAE sold. So I don't know why, to answer your question, Kevin, I have no idea why there's not more of a geopolitical premium in gold, but maybe if the war ends and the 38th time is the charm, maybe we bounce.
Yeah, I'm thinking just a theory. I have no clue if it'll be right or not, but I'm thinking if this war does end, maybe, rising real rates will slow down or come down a little bit with oil maybe coming down. And I think maybe that'll take some of the wind out of the sails of the dollar going up. So I think just, sometimes gold doesn't trade well against those two things. So if you take kind of the momentum away from that, maybe gold and silver have a little bit of chance to recover and breathe. I'm not saying they'll rally, but I just feel like there's been a lot of pressure on them. So I think if you take those two things off, maybe the charts will reset a little bit. And then eventually, like you said, if you see those positive earnings come out, then maybe we can catch a bid back to the upside.
Yeah, I'm curious what'll happen in these stocks in Q2, but some of this macro backdrop is overshadowing the fundamentals. I'm going to work in the PGM super quick here. Platinum also has lost the 50 week. And if we shift it back to the daily, unfortunately, it's completely lost them, just like silver. And then one more here, palladium, maybe the ugliest chart of the day award here. On the daily, it's not just lost them, it's really lost them. And there you can see the cross I was talking about. Let me tighten this up to just a 6-month chart here. That is, this area here is the cross where the shorter duration cross down through the longer ones. That is what you don't want to see in gold or silver. That's what you don't want to see in the equities. But palladium, super ugly. And then again on the weekly, it's down below all of the moving averages, even on the weekly. So that's not a good harbinger for anybody. Palladium's a little different animal, though. It doesn't necessarily trade just like the other precious metals. It's really more used in catalytic converters, but just a super ugly chart. And since we're having an ugly chart session, I thought I'd throw it in there just to bum people out even further.
Yeah, that's a tough one. I mean, definitely an industrial more type metal, but it hasn't traded well at all lately. And I mean, thankfully I don't own any, but it's usually a lot of the metals trade together when they're doing well. So to see that be so weak and so bad, I'm like, that's not a good indicator for gold or silver either right now.
Yeah. And luckily it's more industrial than precious, but still, what we can say is Dr. Copper has held up better than the rest of the metals complex. Now, some of that is the macro tailwinds because there's concerns now there may be tariffs again on copper. So there's some people bringing it into the U.S. Also, AI data center narratives are positive for copper. So is the energy narrative. And so is the critical minerals narrative. So there's a lot. I mean, anything positive you could hope for in a metal, copper is receiving. And I would just highlight the stark difference here. This is the 200-day way down here. It's nowhere close. The warning could be if this thing rolls over right here, it could do a waterfall decline and test it like it did back in March. So we don't want to see this kind of a thing again. The difference here is look at that high wick. Those high wicks are usually topping signals, and we don't really have a super high wick right here. So I'm hoping that it kind of just churns along. Even if copper was to go sideways here, I think it'd be a real boon for the metal. And I'll shift it over to the weekly. Look how far away it is from the 50-week. So for a metal, I guess you can't ask for more than copper, and it's holding up really well. Any thoughts on the good doctor?
Copper's been, at least from my charts and our signals, the strongest of any of the metals. And I think a lot of that, to your point, is the AI data centers. I mean, I've seen some crazy theories on the internet, people saying that the reason like the US government got rid of pennies is because they've been melting them all down and giving them to data centers to build into stuff. So I'm like, I just feel like the narrative around copper is just so bullish right now. It makes it really hard to believe something else.
Well, and I realized as I look at this that I had the wrong copper thing up. That was like more in tons. I think most people are used to seeing this in pounds, and so let's do it in pounds. Copper at 630 a pound is a great price, and if you're a producer, you can make a lot of money at that. And so, speaking of that, the copper producers are in COPX, COPX. It's kind of the GDX for copper stocks. Now, this is more of a whipsaw move, but what's really strange is, when you look at copper, it's up here, it's been at all-time highs, and even on the weekly chart, it was hitting like all-time weekly highs here, 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 and here. And even this, even though it closed down, was a higher weekly high. So you had these higher weekly highs in copper, but when you go to COPX, why is this thing not at triple digits? But it was kind of stair-stepping higher. It's kind of been bouncing off the 144 as support. So again, that's coming in as a layer of support here, not really respecting the 50-day like it was. It was respecting it in the past, like all these charts. But what do you make of copper stocks? Do you have a lot of copper stocks? Do you play in this playground?
I do own some COPX in my retirement account. And what's interesting is we have the trend line for COPX, $81.19, and that traded right around that today. So I'm keeping a close eye on that because I feel like it's just funny how in technicals, a lot of stuff kind of aligns. Like if it's right on that 144 and that's, was it 77? And I have the trend line at 81. Like if it breaks below that, I could see this selling off just like gold and silver. So this is one I'm just keeping a close eye on because I feel like if it does pull back, when you look at the copper chart, how far away it is from some major support lines, like I feel like copper could be, I'm hoping we bounce here, but to your point, it's getting dicey.
Well, at least this one's matching the trend line that you have, or the trend that you have on your site. So at least at $80.14, that's pretty close to 81. So didn't you say 81 was the trend that you saw for
we have
COPX?
81.19 as a trend today, and it's been hovering around that for the last couple of days. So, I mean, it bounced off of it last week on Friday, bounced yesterday on Monday. So I don't like that it's staying around that line. Like I was hoping it would kind of hit that line and bounce back up. So I'm worried today, like with that wick on the candle, like I'm worried this is 3 strikes and we're out and tomorrow could be a bad day for COPX at least.
Mm-hmm. Well, the thing that worries me the most is copper's done so well that if people have profits on it, I could see it rolling over, and it's just so far away from support on these charts that even if we go back to the daily, to go back and test it again wouldn't be a surprise if we saw it come down here. And so, hey, let's celebrate the fact that copper's held up well. After looking at that palladium chart, it makes me feel a little better. And then I'll also bring in the critical minerals. While we're talking critical minerals, Remix is an interesting ETF. We've talked about this one before, but it's got the name of it's the VanEck Rare Earth and Strategic Metals ETF, but it only has about a fourth of the stuff in rare earths. The other 3/4 is in lithium stocks, tungsten stocks, antimony, molybdenum, tantalum, titanium. So it's really a catch-all basket. I think it's a great way to view the critical minerals. And here it was respecting the 50-day. It lost it in that March swoon, but it recovered quicker than the precious metals. And then it got back above it. And when you see something like this, here I'll zoom in a little bit more just so we can get a close-up of what happened in this period. When you see a stock like this testing a resistance level like the 50-day, and then it finally there's another gap up, it gaps up, and then it stays above it. That is a really bullish trend because you're above the 50, kind of like back here, you're above the 50. You don't want to spend time below the 50. And if you do, you want to hit support and get back above it. So I was super encouraged by what happened in March and then the fall through in April and May. Like, okay, way to go, critical minerals. But then even they weren't immune from the selling pressure recently. And then just more recently, now they're back down testing this 144 with gusto. So if this does not hold, I don't want to see it go back down here and break this, but it would be great to do what we saw here and get back above the 50. So bulls that are in critical minerals want to see that. And then you want to spend time above the 50-day. So that's my takeaway on this chart.
I feel like once it got out of the news cycle, it really lost a lot of its steam. Like I feel like for a while it's kind of narrative driven, and Trump saying, "Oh, the government's going to take equity stakes and MP Minerals and all these different companies." And I feel like the second he pivoted away from that and he started talking about taking equity in chip makers, and now they're talking about taking equity in drone companies or quantum computer companies. I feel like they're just kind of chasing what's hot, and whatever kind of rolls off the news cycle, all of a sudden that gets a lot of selling pressure. And I don't necessarily understand it because the government did already take some stakes in some of these companies. So they're still, very interested in their success. And it's not like all of a sudden it's not like Trump came out and said, we don't need any of this anymore. Like they still want it. We still need it, but just the chart action's been bad. And I mean, for Remix, we have the trend line right at $95 and it gapped right below it. And our bottom of the trading range is at 85.6, which is pretty similar to where the 144 is. And it just doesn't look good right now. And I'm a little worried about it considering the sell-off and the rest of the stuff. But I agree with you. This is a great way to just get broad exposure to all those different metals.
Well, we were at the conference in Washington, D.C., where the Department of Defense and Department of Energy were both there, and they're still going to be doling out money to these critical minerals companies. So they're still going to be trying to support the development. That hasn't gone, but you're right. It's out of the news cycle, so out of sight, out of mind. Lithium has been one of the ones that surprised most people this year because it was really ramping higher all year, and most people did not have lithium on their bingo card as being one of the outperforming metals, and it really has been. But even if we zoom in a little bit more closer to what's happening, I'll just do a 3-month one here. It bounced off the 50 and then just lost it. So we're sitting better in lithium than anything else. But especially if you go back and look over just like the last year, it's been a really good trend. But even it was not immune, being such a strong chart, to weakness the last couple sessions.
No, and we have trend at 79.29, and that just lost it on Friday. And then it got rejected there on Monday, and it got through it today, but finished below it. So this is one I'm keeping an eye on because I feel like if it doesn't recapture trend here, like it could go down quick, just like gold and silver.
Well, and just show people how severe this last couple of sessions have been. Almonte is a tungsten producer. It's one of the few tungsten producers. And if I back this chart up to, let's just do 3 years, you can see this thing was a 60-cent stock for a while, 40 cents, 60 cents, 80 cents. Now, and then it got up to be a $24 stock. So this thing had an insane move. I think it was like a 26x move just in the last 2 years. But if we crunch it back down here, I'll just do 1 year. Even like the biggest tungsten producer, one of the only ones, lost support big time with the 50-day and is back down testing the 144 and is like stuck in this no man's land here. So I'm getting a little concerned that even the best of the best broke like the rest.
Yeah, I mean, it's a lot of similar patterns, a lot of similar gaps, price structures, and all these different charts we're showing. So I think could set us up for an interesting summer. I think depending on, like we were talking about before with Iran, but I think sell in May and go away might have been the smart move in the short term, unfortunately.
Well, and if it's okay with you, I'd like to plug an event I'm doing with our friend John Finnick. We actually titled a webinar, Strategies for Buying Gold, Silver, and Critical Mineral Stocks After the Correction. We titled this like 2 months ago or 3 months ago when we were having the March and April madness, and just thought, okay, things will smooth out and channel sideways, and then we'll do this webinar. So this is set up for June the 15th. We have a replay of it, so if you see this after the fact, you can still go to finnickconsulting.com and sign up for the replay. And you see here, there's the register live or the replay button. So if you see this after the fact, go to finnickconsulting.com It's the event June 2026 here at the top. But basically, you can still come back and replay it. And what we're going to do is we're going to talk about what we're actually doing in our own portfolios to navigate the craziness out of this correction. Like, what is John going to be buying and selling? Gold, silver, critical minerals, copper, tungsten, antimony, uranium. We'll be getting into all that. So we're going to lay out our plan and what we're actually doing with specific stocks in our portfolio. And that's why it's a paid event, is that we're going to roll back, the curtain and show you here's what's actually in our portfolios. So just thought I'd mention that really quickly.
Yeah, no, I think that's a great idea and a great event for my listeners who can attend. And do you want to talk about the KE report too while you're still here?
Sure. The Correlate Economics Report, the KE report, this is where we post daily editorials. We have different people on that are experts. Brian London, that throws the New Orleans Gold Investor Conference. Dave Erfley's a newsletter writer. Craig Hemke's a newsletter writer. John Rubino is a great thought leader in the space. So we have these different people on our show, and we interview them at the KE report. Come see us. We also have a YouTube page where we put up all of our videos. And then also, I'll just mention briefly, I write the Excelsior Prosperity Substack. We're about 2,700 people strong now, and appreciate anybody that's a listener that's also a reader. But yeah, I made my last articles metals market bloodbath to close the week, and it looks like that bloodbath has continued as we record this here today, Kevin. So I'll kind of leave it there. Not the most uplifting episode we've done, but these are also the times where you pay close attention to make sure, are we in a continuation pattern where this is going to get ugly and you want to get out of the way? Or are we so oversold, and are the stocks that you like at such a good value that maybe you accumulate? So if you want to know more, check out the webinar. But yeah, this is maybe not going to be one of our most positive episodes together, but I hope it's one that maybe next time we're in a better situation.
Yeah, I was about to say, who knows, have you back on next month and might be a totally different ball game. So I think it's an interesting time, and that's why I think you need to really be paying attention and make sure you're listening to the right people here, because if you're listening to somebody who says gold only goes up forever, obviously they weren't right now. But if you can listen to somebody who kind of understands the inner workings of these companies or the value propositions like you and John do, like, now's a good time to buy stuff on sale, and who knows 3 months, 6 months, what this looks like.
Well, we'll check in again and we'll see how it looks in 3 to 6 months. But Kevin, it's always fun to do these. I love doing these with you. I love your channel. I think people should, well, obviously people that watch here are already fans of StockTA, but come check us out at the KE report or Excelsior Prosperity, and hopefully looking forward to better days ahead of us once we get past the summer doldrums.
Yeah, that sounds good. Thanks for coming on, Shad.